The economic data from China is a mixed bag. It has been nearly half a year since China started easing its monetary policy, with little sign of a rebound in growth. Nevertheless, the downturn appears to be fading, as even the property market has cooled down some. For more on the situation in China, we're joined by analyst Sam Chester from investment management firm Clarity Capital. Mr. Chester.
It's a pleasure.
Thanks for joining us. So, what exactly is going on here in China? What exactly would you point to in the performance? Are we seeing an improvement or not?
So as you said, there are pluses and minuses from the data that was released just this week about China's macroeconomic scenario.
Yeah.
Some of the negative remarks, as you said, there's been a very sluggish response to the government's easing of the monetary supply, which everyone around the world was really hoping to see broader improvement in the economy in response to that. But on the plus side, China's downturn seems to be easing off, particularly looking at property markets, which perhaps we can get into a little bit more. I think the one key indicator you can really look at would be fixed asset investment. Fixed asset investment dropped by almost 2 percentage points over the last quarter, which is significant. Much of that was due to a drop in property investment, which dropped to 6% after, in the past year, in 2014, it was almost 15%. So that's pretty significant. The positive sheen on that you can add, though, is that the government over the last few months has been pouring money into infrastructure, something that the Chinese government has traditionally done. And just as they've done it in the past with success, it's worked now as well. And that's one of the reasons why fixed asset investment, which is the key indicator many people look at, has dropped, but it hasn't dropped as much as we might have feared.
Right. Well, at the same time, pouring money into infrastructure has been a policy of Beijing for a very long time. And there are certainly opinions that say this is part of the reason why China is in the situation that it's in. Would you say that the housing crisis, can you call it a crisis? Would you say that it's imminent?
Well, but before I answer your question, I would just take a step back and say, how have we gotten here? Why is the Chinese economy in a slowdown? After all, many people, when they've been looking at China over the last few years, for decades, China's been posting over 10% economic growth, something which you don't see anywhere else in the world and we've come to expect. There really are three key reasons behind the current slowdown, which has been going on now for the last 2 or 3 years. The first one is structural. And structural fundamentally is just like a company. As companies grow larger and larger, it's much harder to maintain the same pace of growth. So too with countries. Looking at that a little bit more deeply, economic growth is a function of labor, capital, and productivity. In terms of labor, China's youth population capped out in 2012, and ever since then it's on the decline. In terms of capital, China's capital investment is almost at 50% higher than anywhere else in the world. It can't get any higher. So again, it's not growing. And then in terms of productivity, China's nearing the rate of other advanced economies in the world in certain areas, and therefore its productivity also can't rise. So that's structurally. Essentially, after growing over 10% for 3 decades, it couldn't really maintain that pace, and that's why you've seen it fall back now to about 7%. The other two things I would just touch on very briefly would be the policy element and the cyclical element. The policy element is that, unlike past Chinese presidents, the current Chinese president, Xi Jinping, who's been in power since 2013, has changed pace and has said, we will accept slower economic growth in order to advance structural reform. So that's something key in that from Beijing you're looking at a different perspective. And the last point, which ties into what you asked me about the housing markets, is that cyclically, which is in terms of the market's ups and downs, you're seeing that after China borrowed a lot of money in 2009 in order to push through the global financial crisis.
So it's also hedging itself from the
essentially,
crisis.
And then a lot of that debt, debt in China right now is almost at 250% more than GDP, and a lot of that debt has been transferred in to the housing market, which leads to the concern of many people around the world about a crisis in the real estate sector in China.
Okay, well, we're going to have to end here. Thank you so very much, Mr. Sam Chester from Clarity Capital, and also happy birthday on your 30th birthday.
A pleasure as always.
Absolutely.
Thank you.
Thank you.